Hi friends, welcome back. So headline, Nvidia earnings are coming. Big tech needs them to be good. And we also have this Wall Street week ahead Super Bowl. Nvidia earnings stand to test searing AI trade. So what's going to happen with the Nvidia stock this week? I want to go over a couple things, what we're expecting, and I'll share my thoughts and gears as well. And also talk about if it does crash, should you buy the dip, and are hedge funds buying the dip? First, Nvidia earnings. So it's going to be August 28, 2024. I think that's a Wednesday. We're looking for around 59 cents per share. Okay. And this is actually double of last year, actually more than double. So last year there was like 25 cents per share, right? So we're looking for 59 cents. In their last earnings reports back in April, it was like they expected 51 cents per share. It came in at 58, right? So that was a surprise of 13%. And before that, and you guys can see like the steady pathway of growth. They were reporting like 49, 30, 38, 25. You can see right there, cents per share. And then this is the percentage of surprises. So you had like a 30% beat, a 16% beat, a 26% beat, and a 38% beat. The thing is, you can see the pattern for yourself. The earnings of Nvidia keep going up. You guys can see it for yourself. But the amount that they can beat high expectations from Wall Street keeps decreasing. So it is not easy to maintain the pace that they're in. I'll show you guys these kind of charts here. You can see it for yourself. The light blue there is the reported, right? The dark blue is the estimate. So they are beating, but Wall Street just keeps raising their expectations. And can Nvidia keep doing it? Now, my opinion is that I don't think you can have crazy growth forever. That's just my opinion on this. I think AI is all a bubble, but we look at the numbers as they come out, right? So maybe AI, AI and Nvidia is going to come out and say, and AI speaking for Nvidia, I guess, will come out and say, hey guys, we're making tons of cash. And if they do, I'll tell you. And if they're not, I'll also tell you. I'll just tell you what the numbers are. But the some estimates you can see here that their growth may slow. So theoretically, maybe we see, over 100% growth, but then after that, maybe it slows down to like 76%, 50, right? And this is year over year. So I want you to make sure this is clear. So we're not saying it's going to grow, double by, next time that we do an earnings report, just comparing to last year, right? What is our growth? The other thing you want to be understanding though is that we're talking about something that is highly valued for heavy growth. Another way to say, you could say overvalued, or another way you could say it is like really, really high expectations, right? So when you have PEs, is looking at the price of the stock compared to how much company earns, you got PEs in like the 70s and the 40s, et cetera, right? Something like that. Now, to be fair to Nvidia though, your PEG, which is your price to earnings growth, right? So that's taking into account like how much they actually grow. You usually want your PEG around 1, and actually they do have decent numbers. I mean, it's actually fantastic numbers. That's why the stock has exploded. Their earnings have been growing. It's real, guys. So they do make money. This the question is, how long can they keep making money, and can they keep reaching Wall Street expectations? Now, I mentioned before the situation is like, should you buy the dip, or hedge funds buy the dip? Well, whether or not you buy the dip in Nvidia, that is up to you, right? I'm just showing you guys numbers. You have to manage your money as you see fit. What I will say though is that for the average person, just buy S&P 500 index funds. You'll be much safer. You don't have to worry about, deciding whether or not Nvidia is a bubble or not. If you want to buy some, make sure you do that. You do manage your risk though, right? But like I said, the average person buy an index fund, you're going to be fine. Put some money in bonds. Also, put some money in cash. Just have a cash account that you have emergency, rainy day, that kind of thing. If you want to do 6 months, 9 months, whatever, but you just don't know in this day's world. And moreover, I will say though, guys, it's interesting. There was this fantastic chart that Goldman put out just recently, and it was talking about what our mutual funds and hedge funds are buying. Like what do they have in common in their favorite stocks? And here is a list. I don't see Nvidia on it. You have CRH, you got Progressive, PGR, Visa, Fiserv, right? Uber, Workday, MasterCard, and United Health. I want to state really clearly, if you talk about these kind of stocks on YouTube, no one's going to watch it. It's not popular. But these aren't necessarily terrible things, right? Visa's not a terrible thing. Progressive's not a terrible thing. And it's funny because I was looking at this. So this is actually, I have right here, this is a list of like, popular stocks on YouTube. Be it your Palantirs, your Neos, your ChargePoints, your, Robinhoods, or even, Shift, Auto, whatever. I have it sorted by 3-year returns. You can see there's a lot of red there, right? The reality is that what's popular on YouTube doesn't necessarily mean a good investment. And I tell you the truth on this thing, but I understand that for many people on YouTube, right? You want to get the hottest cryptocurrency, the hottest, what stock is going up great in the past month, and you want to buy at the top or whatever. But when you talk about these kind of things, you want to diversify your risk, have more than one kind of asset, right? Have more of the kind of thing. You want to be paying off your debt. I'm just showing you crypto. For example, I understand it's been hot in the last, I guess, year to date, but it depends which one you're in. And frankly, it's gambling. My opinion on the crypto stuff is a big bubble. Nvidia rode the cryptocurrency bubble, right? The bubble did come back. I mean, it's Bitcoin hasn't died out, right? I show you guys the numbers. I'm always showing you this stuff. And now Nvidia is riding the AI bubble, and can this keep up? So that's the question for Nvidia. But I also want to show you too. It's just kind of interesting. This is an interesting one. It was what are hedge funds short, and what are mutual funds not buying. So it says among the out of favor, 4 stocks appear in the list: concentrated hedge fund shorts and underweight by mutual funds. So the first one was Tesla. So if you're in the shorting game, Tesla's the one to go for. Why? Because it's the ultimate bubble stock. So Nvidia is not a bubble stock in terms of hedge funds trying to short it. Nvidia does make real money. I mean, they really do. Now Tesla does bring in money, but their profits are down like 45% or something like that, and which is massive. And whether or not we see a major Nvidia earnings crash, we'll find out with earnings. I mean, so that's why we watch these things. Intel is also on the most shunned stocks list. Moderna and Chevron. It's kind of interesting, and it says here opinions are divided about the Magnificent Seven. So there's no necessary consensus on those. Other things to take a look at as well. These are what says here: stocks are concentrated hedge fund shorts, but where mutual funds are overweight. So are there potential bubbles here, right? So mutual funds are buying, but hedge funds are shorting. You got Sencor, Marvell, Dell, Target, and eBay. This is why you see kind of crazy moves in stocks, say something like a Target. I think it was up, was it 30% in a day or something a couple of days ago? And the recession stocks, be it like your Walmart, your Targets, like these are discount stores kind of stuff. Sure, customers may not shop at Macy's. You'll see crashes like there, and then hey, go shop at Target or like a Walmart. The other thing too, which is always interesting, is these are stocks that hedge funds like, but that mutual funds are underweight. So the top one would be Apple. Then you got Amazon, Google, a lot of the Mag 7 stocks, Meta, Microsoft, Nvidia, right? So mutual funds are buying them, but hedge funds are. You got Berkshire Hathaway in here, GE, Eli Lilly, and Broadcom. Usually though, and when you look at the numbers in this kind of stuff, the hedge funds are a mixed bag whether or not they beat the S&P 500. The thing with the hedge funds is they play a much riskier game. They're going for the sort of, how can I say, big reward or big loss. And also too, regardless of what happens with them, they make money off their management fees, and everyone sort of dreams about being the Michael Burry to taking that, YOLO play, and that's sort of how these games are played. The thing is too, just to be honest with you guys though, a lot of these companies are legit companies, right? Apple, Amazon are legit companies, Google is, etc. But when we go through the news all of the time, I just try to give you a fuller picture of what's happening and not necessarily just tell you the rosiest scenarios. For example, say the Apple one, the news lately has been, their new iPhones are going to be announced, but like, what are their new products going to be? The rumor right now is that they're going to release some sort of like mobile iPad thing with a robot arm. And for me, like, I don't need a robot arm iPad. It's not something I need. I don't need their goggles. And I see, Warren Buffett selling said thing. And so like, that's why I kind of pay attention to the news of this stuff. You look at valuations, you look at what products are coming out, you look at their competition, etc. I mean, and they're losing market share to Chinese companies. The other thing too, which I want to bring up as well, because if you guys follow the channel, we talk about all kinds of things, but I just want to give you a full picture of how to think about this stuff. Jerome Powell just, gave his speech over at Jackson Hole. I made a video on that if you want to check it out. They are signaling to be cutting, and a lot of central banks are. Whether or not the Bank of Japan raises or cuts, you can ask them. The thing about like both the Bank of Japan and the Federal Reserve, talking about the U.S. As well, is that it just felt like they were a little bit too beholden to the market. And in my opinion, if the numbers told you one thing and that's what you thought, hold your ground. Meaning Bank of Japan, if your numbers were telling you before to raise rates, that's what you probably should have done. And with, say, the Fed, if the numbers were telling you that you should hold, just hold. But they got kind of nervous looking at the stock market and the pressure from their respective Wall Street, we'll say friends or relationships. That's just sort of how we read this. But yes, most of the central banks around the world, or I'll say most, that's the way to put it. We'll just say central banks around the world are cutting. Very few are increasing. So the ones that were recently were Japan, Indonesia, and Russia, which is kind of interesting, and actually Turkey as well. The last thing I want to show you guys is this here is, actually it's right here, is different sectors. And the point is, why I'm showing you this is that sometimes, things change, things rotate. I know for a lot of people who, are new to the market, et cetera, or you watch YouTube, they just tell you tech is the most awesome thing at all times. Yes, in a low interest rate environment, and yes, when it works, it works. But it's not necessarily going to be, the end all be all. There are other things out there, be it your energy or your industrial, right? Healthcare, right? I'm just showing you guys this stuff, consumer staples, real estate, etc. I just want you to have a fuller picture of these things. And I'll said it before, but I'll just say it again for the average person. Put money into the S&P 500. That's a good way to go. You don't have to worry too much about, which sector's up, which sector's down. The other thing you want to be thinking about is maxing out your, retirement with your employer, right? Everyone's gonna have a different situation there, but oftentimes your employer will have matching, and you want to take advantage of that. Max that stuff out. That's free money on the table. Also, too, very really important advice these days is worry about your employment. I see layoffs every time I turn on the news. There's always some big company laying off. And just make sure you're always upgrading your skills all the time. Make sure you have good relationships at work. Basically, people like you. Show up to work on time. Do what you need to be doing, right? And so I got to mention this stuff because I think it's important that you have always income coming in, so then you can set money aside for a rainy day. You invest, start taking ownership in companies, and start benefiting from the markets. I understand that everyone just wants like, hey, what's that golden ticket so you can win the lottery, etc. But don't really think about it that way. Just think about, okay, how can I not gamble, but how can I secure my future by building up wealth and essentially like taking the sure thing. Taking the sure thing helps you sleep at night, which is worth oodles of how can I say, having your mind at peace is worth oodles. That's a good way to say it. And you make better decisions overall, opposed to panic buying or panic selling. So that's what's up with the market. I'd like to hear you guys' thoughts on any one of these things. We'll watch the Nvidia earnings as they come out this week. But I just wanted to share this stuff with you because I think it's really quite interesting. That's my thoughts on this. Want to hear yours, and I'll catch you on the next video.